Good afternoon, everyone, and welcome to Stock Market Today for Friday, June 13th. It's Alissa Coram here. And stocks taking a hit today on Mideast attacks between Israel and Iran. We've got your take on how to handle the market action and put everything into context for you. Joining me now is my colleague, Mike Webster. And Mike, I guess maybe we should have been a little bit more on guard for Friday the 13th.
Oh, that is right. It is Friday the 3rd. Now everything makes sense.
Yeah.
Okay. I should have just stayed in bed, frankly.
No. Well, news overnight, definitely throwing investors for a loop. But again, we'll put it into perspective and talk about the game plan for traders given this updated market action. So a lot to get to there as attacks once again between Israel and Iran escalate. But we've got some stocks for the radar, some kind of news driven. We saw defense names moving today. We also saw oil and gas names moving today. So we'll be taking a look at those. We've got your high level look at the indexes and then your detailed deep dive look using some of Webby's charts to put all of those pieces of the mosaic together. So are you ready to get to it?
I was born ready. You know that.
I do know that. Okay, let's first take a look at the major indexes. In terms of Friday's action, the NASDAQ down 1.3% on the day. We finished essentially at session lows after an attempt at a comeback intraday. Meanwhile, the S&P 500 down 1.1% on the day, finishing back below that round number of 6,000. The Dow down 1.8% on the day, finishing back below the 200-day line, and the Russell 2000, the hardest hit with small caps down about 2%, hitting resistance at the 200-day line this week. So let's start with the NASDAQ, Webby. What do you make of the action here? I think that if you look at the headlines could spark fear, but did we really see a high level of fear in the index action and underneath the surface with individual stocks?
Well, we saw some, but it really could have been a lot worse given, this backdrop and more importantly going into a weekend, right? Because we have a couple days that we can't take action on whatever the news flow is. So we could have bad things, then good things, and bad things, and we just don't know. And nor does anyone else know. The folks over in the Middle East don't know. Our president doesn't know. No one knows how things are going to play out. It could just fizzle, which we hope for, just from humanity's sake. We don't, want to see, any more bloodshed. But putting that aside and just thinking of it from a financial standpoint, is because that's what our job is the news could have been a lot worse because we talked about it on IBD Live this morning. You're always looking at the risk of World War III because that's the one extreme that can happen. And what's happened over the last day pushes us closer there, not on the brink of it, but it just pushes us closer. And so as that happens, people get more defensive, which is normal and natural. It would have been very odd for us to gap up and be up 1.3% instead of down 1.3%. It would have made no sense at all, and this makes sense. I was frankly, when I heard the news, I thought we could be down 2, 3, even 4% on that. But we weren't, it was a rocky day intraday. Let's go back to the intraday chart. So a lot happened. You had your gap down, which was normal and natural at the open, and then you tried to gain a little bit of ground, but then it undercut the morning open, which is what you wanted to see because you wanted to see if there were buyers there, and we got those. And then the next level was, let's see if we can get back through the morning highs, and we did. And just to frustrate people, then we came right back down the lows. So I think you put a comment out there midday that it was like a roller coaster, and it really was. It's up and down, up and down. And the second half of the day was more violent than the first half. So that is, as a tape reader, that gives you information that people were, it wasn't a waterfall sell-off where just going straight down, like where your arrow is. If that would have kept on going down, then that would have been, more concerning. But it did stop there and just kind of go sideways. So there was a little short-term equilibrium near the lows, which is good, but it's not great. Like, you don't want to go into a weekend in a weak position, but we are vulnerable to the news flow. And let's go back to the daily and just let's just say we don't know what the news is going to be. So what are the charts telling us? We had stalling slash distribution 2 days ago, and what would have been normal after that would have been a lower day. But actually yesterday was up, so is the market is gravitating towards being more positive than it should be, just like today was more positive than it should have been. But it doesn't mean it's going to go up, but just not falling apart, which is a healthy bull market, frankly. But I think we're a magnet for the 21 day. Whether we close below it or not is up to the market. But that feels like, just like last week, it was looking like we we're a magnet for 20,000. And then we ran into news issues, and then it came down. Now, hopefully, we just get some positive news over the weekend. We just gap up on Monday and we don't look back. But the reality is you have to look at the charts, and the charts give you an expectation, and the expectation in the short term is lower. How much lower? 21 day should be where we stop if the market is healthy, because that puts us at the top of that little handle there, with the cup with handle or the double bottom with handle, however you want to look at it. And it's also right there along with the 21 day. So that's a logical area of support. If we get support there, things are good. It means you'll probably still, most likely lose some money between now and then, but then the bull market should continue, and we should take out, highs given, time and news flow. But that's how I'm looking at it right now. Is, I was, looking at my account with the assumption, as well as swing trader,
Hmm.
of that we were going to have a weak Monday, like that, with that as my base case, and just wanted to adjust
Yeah.
ahead of that. But I still think the market looks fine when you take a step back and let's look at the weekly for a second. That's always helpful. You look at that, it's like it's a nothing. Like, is down a little bit, tiny spread close.
Hmm.
Yes, it is closing at the lows and all, but that's normal and natural in an uptrend. If we were to look at this time frame a year from now, we won't even remember what
What it
news hit
was
today,
this week.
which,
Yeah.
yeah. Whereas if you let's go back to the daily, there are times like the December 18th
Hmm.
day that we had with the Fed, and then we had the deep seek day, and then of course we have the tariff day. Those are all things that you'll look back at the chart and remember. But with today, it was very significant for the world, right? And certainly the folks over on that side of the world. It's just, my heart goes out to everyone. But as far as the market, it's taking it in stride
It sure
so
is.
far.
So, with the power trend and the rising 21-day line being a very key level from a power trend perspective as well, looking at a pullback, I think next week is going to be key. If we do see support there and a bounce or a break of that level, that could be a key decision making moment for investors.
Yeah. So when you get what Charles, Justin, and I kind of coined an overdue break of your 21 day, that's when you're above your 21 day for a long period of time, as we've been, and you finally close below that and get a decisive close below that 21 day, the green line there. That's a sign. It's kind of like a double sell signal, where you sell more than you normally would on any individual signal. So
Hmm.
if we get a close below that, then it doesn't end the power trend, but it does change your stance from leaning bullish because of the power trend to leaning neutral to cautious at that point. Because remember, the power trend doesn't end until that green line goes through the 50 day, which is a million days away,
Right.
right now. Like, by the time, you don't want to wait for that to happen. That turns off the power trend, but it doesn't mean that's not a sell signal. The sell signals are, closes below the 21 day, high staying below the 21 day, close below the 50 day, big distribution, things like that are sell signals, but not the power trend ending. That just changes the state of the market. So at this point, if we get a close below the 21 day, which is highly possible on Monday, in fact, it's almost a base case, but you can't tell the market what to do, but that would be normal. How far are we from the 21 day right now?
Let's check it out. We're 1.2%, so it really would not take much.
Yeah, so another day like today, and it puts us below there. So then what you do is that all closes below the 21 day are not created equal. If we get
Mhm.
one that closes high in the closing range, it, then that is let's pull up the cues so we can show them
Sure.
the closing range. For some reason, we don't have it on the indexes, but if you go there, your closing range for today is 20%. So that means it's in the bottom quartile. If we get one in the upper half, like 50% or higher on Monday, then it's actually supporting action.
Mhm.
If we were to undercut the 21 day, and even a close below that, if you close up in the upper half, you're looking at it as, okay, now we've got support and we've got Monday's low as your
Mhm.
line in the sand. So we just really have to make it through Monday, and that is going to tell us a lot, because this weekend, all the big PMs and the big analysts, they're going to be looking at all the news, and then looking at it and saying, okay, is this a nothing burger as far as the stock market is concerned, or did we not do enough selling? And you'll see that by mid Monday. You'll
Yeah.
get your initial reactions on Monday where people didn't react today and might just sell, and you get a gap down type of thing. And but you really have to give it a few hours to kind of see what the
Mhm.
everyone really thinks, rather than just the market orders near the open.
Yeah, so some really key nuances there. So I'm glad you went over that so we can be prepared for Monday's action. All right, let's take a look at the S&P 500. Where are we at here? Still, of course, above that 21 day, but anything else we should note?
No, basically the same analysis as we did on the Nasdaq. Of course, it wasn't good that we closed below the 6,000 psychological level, but that's not as important as that 21 day, or really the staying above that level, which we're pretty much right at.
The
That
marked high
the
from
marked high.
earlier in
Yeah.
May.
Yeah. So those marked highs, if folks aren't used to our charts, that's just when you've got a high point that stands on its own with 9 bars to the right and 9 bars to the left, or more. So that was a peak. And then same thing on the bottom, 9 bars on each side. And it is sometimes something so simple as that really helps a lot. So staying above that is important, but also when you go below those and then cross back above them, those are buy signals as well. So if we get a decisive close below that marked high, but then a following day go back above it, then it kind of neutralizes itself, because you would be buying on a close back above that. So this is the time you really have to do, for the average person, let's say, that didn't do anything today. Maybe you've got a job all day and now you're watching this over the weekend. You're thinking what to do. What I would suggest is go through all of your holdings. One, see if you're down more than you should be on any stock, and just sell those. Frankly, if you're down more than 7%, at least our philosophy is there's no good reason to be in that situation. Just rip off that band-aid, and then once you get through those, look at all the rest of your stocks and grade them, and just say, okay, these are my A stocks. I want to try to let them wiggle and wobble a little bit, and try to hold on to those. These are my
Mhm.
B and C stocks. My C stocks I would kick out. Like I only held my A stocks, going into the weekend, and I just got rid of the rest of the stuff. And sometimes an A stock is because of the position of the entry.
Mhm.
It's not
Mhm.
not that it's a super quality stock, but because your entry is so good. So you really want to look at either the quality or the entry, or both.
Yeah, great thoughts there. Love that. All right, so we've just looked at the S&P. Let's take a look at RSP. This is the equal weighted S&P 500 ETF. A great way to look at market breadth, down 1.2% on the day. What do you make of the decline in the positioning here?
This one is fine because it never really broke out, right? It's still in this little handle. area, so it's just doodling around in there, so it doesn't look as bad as the other ones. If it had gone up to 181 or 182 and then come back into this area, it would be more concerning. But this is really, you can just see, it's we've got this little cup with handle slash double bottom like all of them, and we're in the handle portion. So what happens in a handle, lots of times you get a final shakeout. So uh, I wouldn't say a shakeout down to 173 would be normal, but certainly above that upside reversal, that's a long way down for an average stock
Mhm.
from here. That's not going to feel good, but it kind of feels like the magnet, it's
Could be in the
yeah,
cards.
we'll see.
Okay. A couple more ETFs to take a look at here, then we'll check in on the sectors. Gold. So when you see market tensions or global tensions increase, you do tend to see that flight to safety trade. Here's a look at GLD. Full disclosure, I did take a position on Thursday, not knowing, of course, that it would act as a little bit of a hedge in my portfolio today. But what do you make of what we're seeing with gold and gold miners? When we were picking stocks for today's show, a couple of gold miners were also coming through our screen. So you did see a lot of strength in this space today.
What's nice about it is like you were buying it before we got this negative news, so there's reason for it to go up even without the negative news. And let's go to the monthly on gold, because it's worth kind of stepping back and just realizing that when commodities go, when they trend, they tend to trend longer than you would think. It's just something weird about commodities that end up happening. So that trend is fully intact. Doesn't make it easy. It's certainly not a good swing trading thing. I have tried swing trading
It's
the
tough.
GDX and GLD, but it is, you've got to be more patient with it.
Hmm.
It's more for position trading than swing trading. Doesn't mean that I won't try it, but it is difficult, because if you bought it yesterday or you bought it today or you maybe even buy it on Monday, you really kind of want to let it come all the way into the 50-day before
Right.
you sell that.
Loves
And
to pull
from
back to the 50-day.
Yeah, and so for me, who these days I've been leaning more on the swing trading than position trading, it just makes it hard to allow that wiggle and wobble. But no, this is the area, and pull up GDX as well.
Hmm.
Um, you know, that looks good, and it looks good before today. Like yesterday was really your setup day, and your expectation was for this to happen. So that's what I'm
Hmm.
always looking at stocks or indexes or ETFs and just saying, okay, are they acting as expected or not? And yesterday was the setup for today, and no one knew this news was going to happen, I don't think. And or at least not broadly speaking, I don't think so. It was strong into this and then just built on that. So that is a good area. And frankly, I don't have anything in that space. I was just too busy kind of playing defense, and I should have
Hmm.
played some offense in the space yesterday and today. And man, sometimes you make mistakes. Good job to you for
Oh,
getting
well,
it yesterday.
if I was doing a really good job, I would have been buying it when we were talking about it, GDX and GLD bouncing off of the 50-day, because I really do think that the pullbacks are, to your point, are the most ideal places to get into something like this because of the patience that it requires. It's a little bit of a different animal, and in
Hmm.
terms of how it trades, what news it moves on, catalyst there. It's just different than handling a growth stock. So it can be very tricky. So I don't think I got the ideal entry. So we'll see where it goes from here. If it can break out after this digestion, we'll just have to see.
I think you got a great entry.
Well, we'll
Oh,
see
you
how it
can
plays
journal
out.
after the show. Journal it over to my account. I'm fine. I'll take it off your
Okay,
hands.
that's not that much. Let's go to USO just briefly here before we pivot to the ETFs, because this is it's very kind of a no-brainer. I feel like whenever you see headlines about Mideast tensions, you tend to get a pretty big move in oil. So today was one of those days.
That is such a tricky space, right? Because you've got so many moving parts, and then sometimes when things go up, then there's pressure for, OPEC to push out more, and then it's a whole supply demand thing. Then you've got the
Mhm.
dollar related to it. Like, it
Yeah.
is a real mess to try to figure this out. And let's go to the monthly on this one, and just to get a sense for what we're dealing with. That has been a hard trade. I mean, look at that gold. Even zoom out so we can see even more history on this. I mean, uh, that's a difficult thing to trade, right?
Mhm.
This is more something you want to try to swing trade, because it doesn't trend nicely, you know
Mhm.
on the upside, but that is a long base that we've got in there, and so if it breaks above that, then that wouldn't be good for anything, frankly. And so you don't want to overthink that one, but
Yeah.
we are trading some oil stocks that are more as a hedge. If something also lines up, but trading oil itself, I think you got to leave that to the experts, just because that's about as hard as it gets, frankly.
Yeah, so many different variables at play there. Okay, let's take a look at our sector ETFs. One notable sector to the downside today that we talked about on IBD Live was the financials. XLF, the worst performer on the day by quite a bit here, down over 2%. There was some news related to stable coins being mulled by Walmart and Amazon that hit the likes of your Visa and your MasterCard, in addition to those Mideast tensions from sort of a travel spending angle as well. So a couple of different factors influencing the action in the financial sector. Some names getting hit harder than others, of course. But financials had a tough day today, which I think is also notable if you look at this is a close below the 21-day line. This is an area, broadly speaking, that has been setting up. We've been taking a look at the likes of your JP Morgans and your Goldman Sachs, and it looks like these did not get hit nearly as hard as some of the other players in the group, whether it was the Visa or the MasterCard, or even some of your high flying names like financial management application Dave, down 13% on the day. So the big money centers looked like they absorbed this pretty well. JP Morgan holding up nicely. Berkshire, I know that was one that you brought up on IBD Live, just in terms of, hey, what's going on underneath here. This didn't move too much on the news. Still in a downtrend, still working on a base. Any other thoughts, Webby?
Yeah, let's go back to Visa or MasterCard, and when you get something out of the blue like that, which is a big, and this is why we like to look at things in terms of ATRs. That's a small, I don't know what the ATR is, but it would be small. And today is a multiple of that being down 5%. So what is the ATR? Okay, it's only 1.1.5, right? And let's call it, and we're down 5%. So your multiples of that on the downside, when that happens, which does happen on news events, you want to really look at it and back away, frankly, because why would you be sitting and holding
Yeah.
this position? It's not a pullback to the 50-day. It's a gap down to the 50-day. So if
Hmm.
the 50-day had been up above the 366 buy point of that consolidation, even though it was really a double bottom with the 351.86 as your buy point, but if the 50-day had been up above there, then that's a pullback into the 50-day, and you might be looking to add to it on some weakness there. But this is a
Out of
breakout
character.
failure, and I would just back away from it and then let it build another base before buying it, frankly. But that doesn't seem to be spilling over to the Goldmans, the
Hmm.
Morgans, and the JP Morgans of the world. So it is that XLF is really
Yeah.
broken into different types. And I'll be quiet so we can get through the rest of the ETFs.
Nope. Never be quiet. Never, never. Let me get back to my list. The second hardest hit on the day was XLK Technology, but this is still acting in character here. That looks pretty normal action, still seeing outperformance versus the S&P 500. Staples reversing lower on the day, down 1.2%, still relative weakness here, which is good if you're wanting a strong bull market in growth. We don't want the staples to be leading. Here's a look at the materials. We're seeing a continuation of a nice move off the lows coming up to that 200-day line. That'll be a critical level for this area, basically keeping pace with the S&P over the last couple of weeks. Communication services, you have your Meta and your Microsoft in here, a 3-day pullback, still holding above the 21-day line, still holding above that handle area, basically keeping pace with the S&P. We did see Microsoft breaking out to highs this week. So I would say that's a notable development for that mega cap tech name. Meta, we'll check it out after last week's breakout, still holding pretty nicely here, just some mild declines there. Taking a look at consumer discretionary, your Tesla and your Amazon are in here, seeing a little bit of relative weakness over the last couple of weeks, but a digestion here taking shape. So I think it might be interesting. Is this going to break higher or break lower? We don't know. We did get an update from Tesla on confirmation of its upcoming robo-taxi debut in Austin. News reports from Bloomberg earlier this month saying it was going to be June 12th. Tesla never confirmed that. They did update this week, I believe, saying June 22nd. So I believe that's next weekend, right? So yeah, today's the 13th.
And I do have a position in that, just have to say, for compliance reasons.
Yeah, so a comeback this week of 10%, getting back above some key levels. So notable action there. And then we will go to the industrials, some mild action here after a breakout to highs late last week, seeing a little bit of a dip in that relative strength line. But overall, if you're looking from the lows, you do still have that relative outperformance. And in here, you have your GE, but you also have your Boeing, which was in the news this week for not good reasons. So the fact that we're seeing XLI still holding up here, pulling back, we'll have to see if maybe some of those bigger names end up forming new bases as they pull back. Next on the list, real estate, basically keeping pace with the S&P 500 right at that 200-day line. Utilities, not only the flight to safety trade, but also you have some AI plays in here. We did get a little bit of an uptick in the relative strength line this week, some tight action in recent weeks. And underneath the surface, we've been taking a look at a lot of those AI adjacent plays. Two more here. Here's a look at healthcare, starting to perhaps turn a little bit of a corner, outperforming the broad market this week, but still badly beaten down. We did take a look at one biotech on IBD Live today with our special guest, Tom Carr, and that is ticker EXEL in the cancer treatment space. So one potentially for the watch list there. And then as you know, we looked at USO, here's XLE, the leading sector of the day on Friday, up 1.7%. And we're going to be taking a look at an oil and gas name here shortly. So we'll be able to, do not only the top down, but the bottom up approach here on energy.
That's what we like to do around here.
We sure do. So let's get to it. In addition to energy, we mentioned defense, another key area on the day. So let's take a look at ESLT, up 5.4%. Seeing a lot of blue days here, Webby, just 2 down days in the last handful of weeks here. This is Elbit Systems. Not only is it in this aerospace defense group that's ranked number 7 out of the 197 groups that we track, but it's Israeli based. So definitely moving on news today here. What do you make of the chart?
Well, I do have a position in it that I bought today, extended as can be. Don't buy up there like that, but I couldn't help myself. Shame on me. But this for a while was my father's, favorite stock. He was, Marine for 20 years, so he's aware of this space, air traffic controller, and in trades, and so I was looking at it as well. And what was nice about it is this was completely disconnected with the bear market that we had. So just pull up the cues for a second, um,
Mm-hmm.
and toggle. We'll just toggle over to it. So that destruction that we saw from 540 down to 420, and now toggle over to the ESLT. That same time frame, it was like non-existent. It was just completely disconnected. So it was, non-correlated is how the folks in the industry would call it. And that's what you're always looking from a portfolio management stance. You're always looking for things that are uncorrelated or negatively correlated. So kind of like with the gold trade that you're doing, or even the oil trade that we're going to talk about in a second. So that is a plus for it, and why I decided to go ahead and stretch and buy it extended. On top of that, it not only did it hold above the 40-week line, which is your black line on there, pretty much held your 10-week line, which is like the 50-day. A little bit of little closes below there, but not in a material
Mm-hmm.
way. So that is telling you that whoever's in there, whatever institutions are in there, really like and want to hold on to this. Now let's go over to the daily for a second, because there is, the negative aspect of this is it trades very thin. And so if you're in there, you don't want to have the same type of size that you would have on something more liquid, because look at how it's just spotty. It just doesn't trade a lot. So if you're in there, you've got to be a little bit more tactical with your trades, and that's a whole topic for another day. But it looks good. That RS line is smoking. Plus you've got a good RS number, which is different. They're same name, but measuring different things. So the RS line is measuring versus S&P 500, whereas the number is versus our entire database. So both ways, it's outperforming. Plus you've got strong estimates. So it has everything going for it, except very news related.
Yeah.
Obviously, it's Israeli, and it's drone type stuff like in Israel during this thing. So you've got to be up for some risk if you're going to trade it. And so we will see how this plays out. And yeah, it looks good.
So you said with it being thinner, keep that in mind from a position sizing standpoint. Also, the positioning of the stock, like you said, you stretched a little bit here to buy it. Talk to me about the stop, how you're managing the trade.
Yeah, so the stop is probably going to have to be yesterday's close.
Oh, close.
Between yesterday's
Mhm.
close and yesterday's low, like letting it go down that much, which, that's a lot for me. That's, 5-6% from there. And I don't know that I would let it come all the way in that much, but I probably won't have a chance. It's if the news flow a certain way this weekend, like
Mm,
if it happens as uh, in a nice way for the market, this one probably goes down. So it'll, neutralize. So I'm also looking at it as kind of synthetic hedge, I guess is a way that you
mm,
could put it, or just, the same thing of why, if I did start in gold next week, or, adding to my oil position, then it's a way of hedging rather than directly hedging.
mhm. Interesting. Okay, let's take a look at RRC, one of the oil and gas explorers and producers that we covered on IBD Live. I mean, you were looking at this one pre-market Webby,
Hmm.
and it ended up having a really nice day today, breaking out of 3.4%, clearing this sideways range.
Yeah, so I did put this on, or we did put it on Swing Trader, and then we did add to it on Swing Trader, making it a full position, and then after that, I did buy some in my own account. I hope it doesn't work out, frankly, because then that means, good things for the world, most likely. But you trade what's in front of you, and this is a good setup. Let's go to the monthly, though, to kind of get the context of what we're dealing with. These are things that when they don't work out, they really don't work out. I mean, that really can, fall apart. So you've got to have stops when you're trading any oil, any commodity related things, because when they go down just as much as a tech stock, if not more. And let's toggle over to a weekly for a second. And with this, what you want to keep in mind with what makes oil stocks so hard is that they will form these bases that look really good, and they'll break out because they're all of us, the people that use technical analysis buying, and then they just kind of fizzle out, and then they base build again. And ultimately,
Mhm.
lots of times we'll do what like our good buddy Chris Gessel loves is the stair stepping, go higher and a little bit each time, which you can see it's done this. But just picture, like, how could you have traded this since 23 and made money? You would have to be very, very
Right.
quick on the trigger. So you
Mhm.
always want to be thinking in terms like that when you're trading an oil stock. It's not something like some tech stock that you might be able to hold for a year, 2 years, 5 years, or something like that. It's
Yeah.
very unlikely with oil, but it's set up nicely, decent base, not the most beautiful base I've ever seen, but certainly a good looking base. And I liked how it was holding up, even intraday when the market was kind of strengthening, and then this started selling off, it firmed up. And so it wasn't just
Mhm.
the market goes up, this one goes down, the market goes down, this one goes up. It
Right.
was, they were both going up at the same time for a little while. And I did like
Mhm.
that type of action. So we'll see how this plays out. I would go through the energy space and look for other ones like this. But if you wanted to go with this one, it's not too far out of there. The standard pivot was essentially 41, but your alternative pivot was about 4 or 5 days ago. But that didn't really have a nice clean breakout. So today was really your day to buy it. So it's not too far gone.
Okay, let's also take a look at GWRE. This is Guidewire. Chris Gessel, our chief content officer, covered this on IBD Live this morning. Powerful move on earnings a couple of weeks ago with shares up over 16% on the day. Huge acceleration in bottom line growth, up 238% in the most recent quarter, and some really nice, tight, orderly action ever since that explosive move.
Yeah, so we did put this on Swing Trader, and I did buy some myself after the 30-minute window. Okay, let's go over what I don't like about it first. So, the gap downs on the earnings, I don't like that, like in a big way. But what balances out when those happen, and the way I look at it is when you get heavy selling on earnings, is you don't know if that selling is done or not until it can move above it and do some sort of formation up there and give traders that are trapped in there a chance to get out. So we had that liquidity event, a week and a half ago on the earnings, and it went up and it stayed up. So if those people were still trapped in there that were selling, back in December and in March, they would have sold into that. And maybe they did. And those people look like they're long gone. Why? Because we were up in a bad tape today. And it had every reason to undercut the low of the gap with such a weak environment. But instead of not even going anywhere near that gap, it held up and then moved above a kind of relatively important 250 psychological level. Not as important as 200 or 300, but still round numbers are meaningful. Little upside reversal. It's still in position for an aggressive swing trade, not a position trade because it's long gone out of that base. But what we would really be using is today's low to exit. So
Mhm.
it's very tight, and this could just be, shoot, hopefully that data is wrong because it's showing after hours is down 19%.
Oh,
So
yeah,
let's
I've seen that
let's
too.
hope that's a bad print. Sometimes we get some bad prints. As
Oh my
if that happened, well, that just it took out our stop. So we will see. If that happened, we'll be selling it Monday morning at the open. I think it's probably a bad print unless there was some news that happened. So anyways, if this is a bad print and we just move up above today's high, I'll be adding to it.
Okay. Let me just check real quick.
Yeah, I'm checking myself since I have a position.
I'm
Um,
not I think it's a bad print. I'm looking on another platform and I'm not seeing the same action.
Good. Okay,
So, I don't
we
know
can
about
move.
you. I'll check one more
Um, yeah.
whenever, we switch to your charts. Over to you, Webby.
All right, I will
I'll
do
check
that,
another
and you
platform.
you check. Let's see.
Hmm.
Can you tell me, can you see my charts?
I sure can.
Okay, we are going to do the Bob Weir take a step back and look at the weekly. And this kind of puts things in perspective, especially on news-driven weeks like this. So let's blow this up a little bit. This is SPY. Um, oops, went in the wrong direction. So we had last week, we had this beautiful candle, closed near the highs, big spread on the week, and the distance between the open and the high, or the open and the close for the week were great. Now this week we've got a small candle, meaning that we closed lower than where we opened for the week, but we did have a higher high, and more importantly, we had a higher low, a dramatically higher low. So that's a good thing. But with a candle like this, your expectation is for some further weakness, but not a material amount, just based off of this. Now, obviously, we've got the news that we've got to contend with, and let's look at the Nasdaq, see if there's anything different. The basic same thing here. It's just a little bit of a weaker candle because the body, the negative body, the pink body, is a little bit bigger proportionally than SPY, but it's in the same ballpark. And again, a much higher low, which is constructive. But I don't like that top wick being so much longer than the
Mhm.
bottom wick, meaning the little area that you see there from the little the wick. That's why we call it a wick. Okay, looking for another name when we have a good name. Okay, so here we've got the regression line that we are doing from the follow through day on the 22nd. I asked Justin how many days
Days.
that was, and I didn't get a chance to look and see what he said, but I think it's getting closer to 50. So this is, we like to stop it at 50 days to see what the trend is like and just lock these regression lines in there. And so if we go underneath this one in a big way and stay below it, then this trend has changed. So right now, that's why we use these, is because it allows you to step back and just say, okay, it's doing about what you'd expected to do. It can come all the way into that green line and still be normal. You just don't
Yep.
want it staying below there. And let's
Yeah.
look at the
Let me also add a reminder for folks about these regression channel lines. I don't think we've talked about it in a while. There's a reason why the lower band is green and the upper band is red. Can you briefly talk about that?
you could. People want to hear you. Come on.
Okay. Well, I feel like it's close on the comp, but I think it's even closer on the S&P.
I'll go
But
back there.
you have two signals at the same time. So if we do get a bounce off of the 21 day and a bounce off of this lower regression channel line, that is where you would want to be adding exposure. And when we start getting overheated, like we did, where was that in May? We came to the upper channel line again very early on in the data set. So you have to keep that in mind. But usually, when you have these regression channels that are quite established, these trends that are established, when you get to that upper channel, that's where you have increased likelihood for a pullback and perhaps where you want to be scaling back your exposure.
Well said. I would have taken at least 15 more minutes to do it. So that's why we had you do it. Okay, so now we've got our 50% retracement, and this is SPY that we're looking at. So we're taking the highs from February and the lows from April and just seeing where's the midpoint. The midpoint is 547.37 if you're listening on Spotify or Apple Music.
There you go.
And so we're well above that at 597. So we just want to stay in that area when we're looking at this particular chart. And we're going to do the same thing for the Nasdaq Composite. And that midpoint is 17,447. So we're still, at being over 19,400, we're well above that. So that's not a concern. But we do want to look at this on the Qs as well over a shorter time frame. And let's just go to an intraday. And I'm going to go with a 65-minute chart and just using the highs from June 11th and then 2 days ago, and then today's low. And that midpoint is 531.28. So in the very short term, we want to see the Qs move back above that and stay in that upper area. So I like looking at this from on 5-minute charts out to monthly charts and everything in between. It's just how I like to look at charts. Next, we will look at the levels, and I've changed these around a little bit, and I might keep doing that. So we've tried to get rid of some of the noise on here, and just look at the kind of the key points. And so my first line, obviously on the upside, it's the highs from our recent highs from earlier this week, but on the downside, on the June 5th low, because at 590.93, that's right around the 21 day, and also, as you were mentioning, pretty close to the regression line. So that becomes an important level. And then the next one is the 575.60, which is uh, the low on May 23rd, and that's just underneath your 200 days. So you want to stay above that level, and it's always nice when you have multiple things
Yeah.
colliding. And let's see. Same thing for the NASDAQ. I have a couple extra lines on here. Really, um, the top of this area in early May, as well as the bottom of June 5th, they're kind of the same level. So the 19,226 area, we want to stay above that, and that's right around your 21 day, which is your blue line there. Then next, there are a million levels that we could have put on here, but the low from the 30th of May, as well as the low from the 23rd of May, those are key levels. And then hopefully we don't get down to that 17,500, but we will see. Then the next thing, we just like to keep things simple. We went through a lot of kind of more complicated things. Now we just like to look at that blue line, the 21 day, and just see, where are you? When you look at this, it's
Yeah.
like, oh,
This is
yeah,
my
it's not that
favorite.
bad. Yeah, right. It's my favorite too. And it's just so simple. And you say, okay, that low is still above it. Yes, the candle doesn't look good, and it looks like it might want to come down to the 21 day, but you know, really not that bad. And let's take a look at the
Hmm.
composite. It looks a little worse because that candle's a bit worse, but still staying above it. And it's like, at this point, at the market close, everyone knew what had happened overnight between Iran and Israel. So it wasn't like this thing that's hanging over the head that we need to wait for the reaction. Now there's all the retaliation and everything that goes over the weekend, but that was built into this. And yeah, a terrible looking candle, but we're still above that
Hmm.
21 day. And now we will, let me,
And as you're pulling that
yeah,
up, I just want
yeah.
to update the audience on that guide wire print. We had our handy dandy trusted team, three folks on the IBD team independently check, and they're not seeing anything out there. Justin, Ed, and Ken all checked. So I think it might be a bad print.
Well, they are superstars. How helpful, because
Aren't
I know how
they?
busy
I
they
know.
are working on the
I
print
know.
edition of IBD. And who should get the
They're the
print
best.
edition of IBD?
Everyone.
There you go. It's been a while. All
Yeah.
right. So now we've got our this is the Webby RSI, which is just your low versus your 21 day expressed as an ATR, which is what we see on the bottom. And we have this wall of blue or wall of teal on there. And we really wanted to see it build even longer and higher than it did. But it was still nice. And, I'm saying it as past tense because I'm assuming we
Mhm.
undercut the 21 day on Monday. But, eventually, let's say we undercut the 21 day on Monday. That's fine. What we want to see, and that'll take the Webby RSI down to zero or negative essentially. But then what we want to see is when we move back above it, that low versus a 21 day really expand, telling people that, okay, they got off sides, they were shaken out, and then it builds higher. So that this
Mhm.
little area here, the 2.2, where it kind of maxed out, if we recover from this, then we want to see that build and really get above that level.
Yeah.
That
And I
would be,
will also mention,
yeah,
I'm so sorry.
no, it's okay.
I will just mention that the close below the 21-day line, huge signal. You went through all the nuances pretty close to the top of the show, but it doesn't mean it's necessarily 100% spelling doom, right? You have to see what happens after that, but it doesn't mean that you don't adjust your expectations accordingly in real time. Got to be flexible.
Oh yeah, that's such an important point that you're making, and that and it also depends on what style you're trading. So the 21 day
Mhm.
works for both position trading as well as swing trading, but a big deal for swing trading, because if you're buying strength in swing trading and you're not above the 21 day, you're really going against the current, and you want to go with the current or go with the grain, so to speak. Position trading, you can let it go back underneath the 21 day a little bit, but not in a material way. And more importantly, what you don't want is this orange thing popping up on here, and that is your high versus your 21 day. So that's what my original Webby RSI, I only focus on your low versus your 21 day, but with the second version of it, that I added the high versus the 21 day, which this is what you don't want to see because it's measuring that distance there. And so that's where, from a position trading standpoint, then you're really paying attention and having to back away, if that makes sense. And this was the Nasdaq. This one did get a little bit stronger, almost got up to a 3 ATR, like 2.75 or so. And so if we come back out of this and move back above the 20, the 20,000 level, we want to see that expand. We will take whatever we get. Next thing we're going to do is go over to my daughter's favorite indicator, the Bob Marley indicator, and this is just showing your high, and the green area is within 4 ATRs of your high, and you're still in that area even with the sell-off that we had today. So within 2 ATRs of that high, so that is fine. And we will round this up with the Nasdaq. Same thing there. It's closer to 3. Let's look at the RSP because that is much weaker. And that one is in your yellow area. So this is your average stock in the S&P. So your average uh, liquid stock is down close to 5 ATRs off of it, or about 4.6 ATRs off of its high. So that is concerning. We want to see that one get stronger. But as we were talking about on IBD Live today, this is still, or even I think earlier on this show, this is just a handle, so it hasn't broken out yet. So we will forgive that one. And I'm going to stop sharing.
Okay. Well, let's talk about the game plan for the week ahead. Circling back to what you talked about at the beginning of the show, we did get some signals late this week for taking action. It looks like there's an increased likelihood of a test of that 21-day line come Monday for the major indexes, but it all depends on how we do it and how we close it. And that is an if, right? We don't know what the news flow is going to be like over the weekend, but we need to prepare. And you also talked about grading your stocks, ranking your stocks, and weeding the portfolio.
Yeah, so let's just recap on, or just summarize that again, because it's
Mhm.
very important for people. Don't bury your head in the sand. Look at your portfolio and look at what you paid for your stocks. If you're down on any stock, you are wrong, period. Then it's, how wrong were you, and do you need to take action? Just because you're down on something doesn't mean you have to take action, but it does mean by definition you're wrong. I'm wrong all the time. You know, most traders are wrong more than they're right. It's the same way with me. So what you do is you want to cut those losses as quickly as possible, because those losses can grow in a sell-off. Let's say this is a news related sell-off for 2 weeks. That will shake you out. That'll get you to capitulate at some point. So I've just found it's easier to capitulate early and sell than waiting and trying to hold. I'm going to give it. I'm a long-term investor, all this stuff, and you just give it all this room, and then finally all that pressure builds, and then you just sell it all at once. So it's
Mm.
kind of like, if you let a little bit of it out at a time, it's easier. And you could do that throughout the day as well. On Monday, you could say, let's say we gap down 3%. News flow is terrible over the weekend. Doesn't mean you have to blow everything out at the open. What you could do is you can set TWAPs if your broker offers that. I trade, one of my accounts is through Interactive Broker. I don't have any relationship with them other than I really like their platform. And they do offer time weighted average price orders, meaning that you could put your order in at the open or even pre-market and say, I want to trade this sell this stock throughout the entire day and it'll evenly do it. Now, if your broker doesn't offer that, most of them don't, that's fine. Since commissions are free now, you can take those shares. Let's just say you have 100 shares of something to sell. You can sell, 10 shares every X number of minutes. Just do the math and see, how that plays out. Because what happens is it will alleviate some of that pressure that builds. And you want to think clearly. And if you've got the pressure building in your head of like, oh geez, these losses are getting out of control, and you're trying to hold on for dear life, it's better just let it go, and then you'll think clearer. And also take advantage of the weekend and really put thought into it. I wouldn't do it now. I've always said, wait until Saturday or Sunday, let yourself, kind of enjoy some life and kind of get back to a centered kind of mindset. Then look at things and just go, okay, well, I bought it at $100. It's at $80 now. That one's out. That one's got to go. Now I bought something at $100. It's $98. Well, let's see what level I need to cut that at. Now I bought it at $100, but I'm at $120. Okay, do I want to lock some of that in, or maybe add to it if that's the thing that's working for me, or at least where is that line in the sand that you want to start backing away? If you make a game plan, I would also suggest emailing it to yourself. And if you have a trading buddy or a trading group that you're involved with, email it to them too. It gives you kind of this sense of kind of like if you're going to go working out and you tell someone, hey, I'm going to work out every day for the next month or year or whatever.
Accountability buddy.
That's what it is. I was looking for that word. Thank you. So do that, and it will really change your trading. It doesn't mean all your decisions are going to be the right ones, but you'll also have the documentation for your post-analysis and go, okay, over the weekend, I said I was going to blow out everything at the open if this happened. And then let's say that happened and it was a terrible mistake. You can go back in time and say, okay, why was I thinking that? And what did I, or did you have your game plan, but you completely abandoned it?
Yeah.
And so it's a great technique for people, everyone, whether you're brand new or you've been doing this for decades. Doing that really helps, and it'll calm the emotions down that are involved whenever you're dealing with money and risk. And so I think everyone should do that.
Some fantastic wisdom there. So glad you wrapped up the show with that. I was a slacker this week, Webby. I'm coming up blank for the song of the week, but do you have something for us?
Okay, I was just thinking that I didn't think of a song until you said the word "Come Monday," which obviously Jimmy
There you
Buffett.
go.
So that I'm going to steal that one. We could also do the "Running on Faith," a little Eric Clapton. We could do "Shelter from the Storm" if things are bad. We could do, well, there's some other ones that we could do that we don't want to do. We want to stay very positive. So I'm hoping that, just for humanity's sake, that we get closer to the peace in the world, because, it's just, we can all get along together. We're all humans, and we can all find, common ground together, and hopefully we get closer to that. And separately, I just wanted to wish my father a very happy Father's Day. I'm grateful to be out here spending time with the family, and happy belated Mother's Day to my mother, but I think I said it back then too. But I just have the best parents, and they're better grandparents than they are parents, and they were A++ parents. So I got lucky, babe, so to speak. That's another song reference, so I couldn't help myself.
Song references in
Yes.
there. Yes. Happy Father's Day to all the dads out there. We appreciate everyone tuning in. Thank you so much, Webby. We appreciate your time this week. And thanks everyone for watching. That is it from us for this week, but we will be back with more Monday morning on IBD Live, investors.com/IBD Live for all the details. We will see you there, and then we'll also see you right back here on Monday after the close. Have a great weekend.